Canada's weakest housing market are the condos. Once the most secure type of an investment became the nightmare for many today. Well, the headlines just don't match the reality, and we'll get into it. I would like to talk to you. I would like you to be engaged in this particular video and share your personal experiences. So let's get right into the video. The headlines don't match reality. You might have heard that the Toronto market is stabilizing, but that's not what the numbers say. Condos that once sold in days are now sitting for months and not moving. Inventory is piling up and there's no wave of buyers to absorb it. Here is what the CBC won't tell you about what's really happening in the condo market. All right, so let's break this up. Well, what is going on in the mainstream media? Sometimes they cover little bits and pieces here and there, but most of the time they're trying to keep it under the carpet. But the reality is showing the cracks. Some of these condos, in fact, most of these condos are not selling. And the reason is simple. They were not geared towards the end user buyer. They were geared towards the investor that will buy these shoebox unit and they will just sit on it, rent it to maybe some students or somebody that's passing through our major cities of Canada like Toronto and Vancouver and hold on to an investment. However, things are changing very, very quickly. And these condos are not selling. They're not selling within weeks. They're not even selling within months. Some of these condos are sitting for years. However, they're not moving. And the buyer's pool, it's shrinking so much that some of these investors and sellers are getting very, very, very desperate. So let's get into the second segment. Months of inventory surging, no absorption, no demand. We now are over 29,800 completed condo units just in the greater Toronto area last year. More are coming in 2025 and 2026, and there are no buyers base ready to absorb. Months of inventory is at crisis level. We're not just oversupplied. We're in a market that can't clear its own backlog anymore. Well, that is true. I mean, nearly 30,000 of these condos got completed in 2024. And you know, if you have been struggling, that the actual competition in your own tower is insane, right? Unless you are very, very competitive when it comes to the price, right? And most people do not want to acknowledge it, right? They are sticking to the prices at the peak pricing, or they're sticking to the price that they once paid. But unfortunately, that type of strategy is not working for many, right? And therefore, we have some of these towers literally empty, right? So that's definitely one of the problems. Buyer's pool shrinking, and we cannot absorb. We need the bigger population. We need the higher demand, and we need more affordability in order to absorb these units. And some of the units keep coming back to the market, right? They're recycled back into the market, which is a big concern. All right, so let's move forward. The buyer has changed. Conditions are not the same. The demand we had in 2020, 2021 was driven by cheap debt, fear of missing out, pandemic stimulants. Those buyers are gone. The fundamentals have changed completely. We're no longer in the world where investors can assume price will go up and renters will always cover the mortgage. Well, that's just it, right? What I don't understand, I mean, you know, everybody has a prediction, right? Like, and most of the people calculate. But the risk factor that some of these people took back in the day, purchasing these condos, when everything was kind of gridlocked, right? Like no inventory, fear of missing out, you will never be able to buy a unit ever in your life, right? That fear pushed people not making right decisions. However, They were projecting, but they were only projecting the numbers to work in their favor. So let me give you an example. I will buy this unit. If I don't close on it, I will sell it. I will amend it to another buyer for a profit, and I'm gone. Second version, I will keep the unit. I will close on the unit because money is cheap, right? So they did not consider that maybe there's a possibility of interest rate hikes. Then on top of that, the rent will still stay high, and that particular rent will cover my mortgage, will cover my ongoing costs, right? So that's the problem. And another big factor that majority of the people said, even if I'm underwater and I'm not cash flowing at the moment, I would like to keep the property because these types of property will continue to grow and the sky is the limit. And I will bank on the equity gains versus the cash flow. So that was a strategy which proven to be extremely risky. All right, let's move. Demand is disappearing across major cities. It's not just Toronto. Cities like Vancouver, Hamilton, and Ottawa are seeing the same story. Rents are stalling, vacancies are rising, pre-con launches are being canceled. The investor army that used to flood pre-con launches, it's gone quiet. Yes, so this is what's happening all across Canada, especially major cities and towns. These launches are being completely stalled. Projects are being completely erased, right? Imagine thousands and thousands of dollars of marketing, opening up showrooms, hiring agents, hiring the marketing teams, hiring designers, building up that platform. These developers are walking away knowing that they cannot sell these units, right? So therefore, there's probably a good chance that we will not see more projects come to light, right? And that creates another issue, which is unemployment. It creates all these sectors being delayed, right? Like agents, marketing teams, everything is associated in order to drive the economy forward. There's a good chance that we will see that particular sector in the dark for a long time until we clear what we had. And let me tell you guys, the inventory that is piling up daily, it is crazy. It will take us years in order to clear that up. All right. So the investor trap, cash flow crisis, and appraisal failures. Original purchase prices from 2020 to 2022 are now a major problem. Many of these units won't appraise anywhere close to their contract value. Buyers either can close or are forced to bring in massive capital at the end. Add rising rates, taxes, condo fees, negative cash flow, and even full rent. All right, so another big, huge impact and issue. It's not only that the down payment that it was given at the time of the purchase, right? Most of these down payments were generated from something else. They were generated from people already owning real estate, saw equity jumps, pulled that capital via HELOC, line of credits, and everything else, invested into these condo units. And now another big trap, another big wall is that appraisal, right? If a appraisal comes in soft or comes in low or comes in below, and 99.90% are coming below, right? So the actual investor or the buyer has to come up with the difference in order to close. However, there were blanket mortgages that were attached at one point in this process where the bank would actually give you the full appraisal or purchase value at the time of a purchase. But at this point, you're just writing a product that is extremely overpriced, and you're not getting your money's worth, because even that tenant will not be able to cover, not even close, and you're sinking maybe even thousands of dollars monthly in order to make it work. All right. End users don't want these units anymore. The product being built doesn't match today's buyer demand. Small units, poor layouts, high fees, no parking. End users want affordability, space, and stability, not one bedroom, 500 square foot boxes at 2,700 per month. Builders bet on investors, and now investors are gone, and end users won't step in. Well, this is just it. At one point, developers and builders and the entire marketing prediction segment and plan, and they have to choose, who are we gearing towards to? End users, people that are investing, people that are investing overseas, because there's a difference between these two as well. Even though they might be similar, but people that are invest from here, they have one particular criteria. People that are investing overseas have another criteria. However, these developers and builders projected and invested heavily into speculators and investors, and they were wrong. Now everything is falling apart, and they cannot even sell their own portfolios, what is left. I did hear that some of these developers are rejigging now. They're rejigging some of different layouts, two small condos, rejigging into one and all of that stuff, right? Obviously, requires more brains, requires more money, and at the end of the day, we need affordability, right? People need to feel comfortable in order to buy as an end user. That's their place. They're thinking with their heart, not their wallet, all right? So let's move on. The wild card: tariffs, layoffs, and fear. Tariffs on construction materials are rising. Unemployment is ticking up in Canada. Consumer sentiment is in retreat. In this kind of climate, big ticket purchases get delayed indefinitely. People wait, they hold, they don't buy. So yes, this is definitely a problem. And as you know, people making these purchases today are not pressured, right? And even if they have some funds laying around in their savings account or in the bank or wherever they have them laying around, they take their time in order to make these right moves, because the commitment is crazy. It has always been 25 years, 30 years, 35 years. By the time, if you're lucky, pay off some of these purchases, right? So not everyone is pushed today and is looking at this investment. They're looking at it from a completely different lens, and they're making sure that their dollar and their money will be fetched for a long time. And trust me, people want security. They want to feel safe. They want to know that their investments will be there for as long as they want it to be. All right. No value, no certainty, no exit. It's not just that condos are expensive. It's that there's no value proposition, high carrying cost, no cash flow, risk of price drops, and no confidence. People don't know where rates, jobs, or taxes are going. When uncertainty is high, fear wins. Yes, fear wins, but there's a reason. I mean, all of these things, taxes and ongoing costs, and you know what? Like, if you have to buy, you have to fork out twice, maybe triple as much as you would rent the same unit. So where's the value? Where's that dangling carrot that everyone is looking for? Yes, people want to own. Yes, people want that type of pride. And yes, people want to have equity build up. People are not stupid, but they don't want to be ripped off. And now we're in the gridlock. And therefore, I do believe that we will see this madness continue, and it will get much, much worse than it already is just by looking at the numbers. All right, the big risk: prices could fall even more. There's a real possibility that condo prices will continue falling, erase all gains from the pandemic run-up, and go even further. We're not just looking at a correction anymore. This is starting to look like a slow motion collapse. Yes, it is a slow motion collapse and it is draining. And yes, I get it. Some of these investors, some of these people, the ego kicks in. I paid X and I want X back. Plus, I want the profits. And that's the game. I'm an investor for a reason. I need to win. Unfortunately, guys, you need to realize that Canadian real estate market is not immortal. It used to be the place to go to, but it became extremely risky once we saw all these prices increase, once we saw the FOMO kick in and people overpaying for products that were not worth it. Now we're dealing with tariffs, we're dealing with uncertainty, and yes, fear wins. So therefore, it is gonna be a long and drainy collapse and a shaky ride. All right, folks, so final thoughts. The market doesn't work anymore. This used to be a simple buy, wait, profit. Today, buyers are nervous, investors are trapped, and developers are stuck. The condo market isn't just slowing, it's malfunctioning. And unless conditions change dramatically, this will get worse before it gets better. All right, folks, so those were the final thoughts. But at the end of the day, look, there's so many items on that checklist that need to go into our favor in order for the market to move forward. This is just not an overnight fix. We need affordability. But how can we create affordability? Unless people lose money, we cannot create affordability. Tariffs, ongoing rises, uncertainty across the border, they're impacting. There are hundreds of thousands of people in Canada clinging onto their jobs, right? But how can you create jobs if nobody's creating more jobs? And if we're going to get into halting future mechanisms where the developers and the entire sectors or industries are weighing in and out what to do next, well, guess what's going to happen to your job? Either you're going to get fired or you're going to be useless. And when I say that, I mean it with all due respect. And I want to touch up onto AI, artificial intelligence. Once, maybe you were valued the best customer service person, the best person to go to in order to answer all these emails or inquiries and all of that stuff, right? Today, AI can do it probably better than I and you can, right? So that's another segment that is putting all of us into jeopardy. Yes, it's not gonna happen overnight, but listen, look at your blind spot always, because it's coming faster than you might anticipate. And it is very important to have a plan, your personal plan, what to do and how to get out of your own crisis. So I hope that you gain some value out of this video. Please like, share, and subscribe, and I'll see you in the next one.